Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Troy Cates, co-founder and managing partner at NEOS Investments. He joins me to discuss utilizing NDX Index options in an ETF for income generation. Troy, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me today.
All right, you got it. Tell us about NEOS. What does that stand for?
Sure. NEOS it stands for Next Evolution Option Strategies. So at NEOS here, we bring out option-based ETFs to the market. It's not a side business to a larger ETF business. It is what we focus on. We have a really large team of veteran option and ETF professionals here.
How does QQQI fit into that investment philosophy?
Sure. So QQQI is one of our newest ETFs. That's the NEOS Nasdaq 100 High Income ETF. In this strategy, we wanted to have a portfolio that was long all the Nasdaq 100 names in the same weighting as the Nasdaq 100, but we wanted to add on an NDX Index option overlay. So basically a laddered short call portfolio to bring in income and pay that income out monthly. So we wanted a high income product, but we wanted that participation with the Nasdaq 100.
So why utilize NDX Index options for income generation?
Sure, it's a great question. It always comes up a lot. We like to use index options wherever we can. One, NDX index options give you deep liquidity into the NASDAQ 100 index market. But two, you get that tax efficiency from them. They're treated as 1256 contracts, which gives you a mix of 60% long-term cap gains and 40% short-term cap gains, no matter the holding period. So it's really important for us as we focus on not only what kind of total return we can provide in the portfolio, but how we can make it as tax efficient as possible.
What measures are in place for long-term capital appreciation potential?
So for QQQI, one of the things that we focus on here at NEOS is all of our strategies are rules-based, they're systematic. And one of the things we like to say is not only how do we provide that high monthly income with those NDX index options that we're selling out of the money. So we're selling calls out of the money to have that upside appreciation, but also our rule strategies are looking at different levels of volatility. And with that, on a monthly basis, when we're rolling, it's moving the overall notional that's covered by the short calls. So if there's a little less notional covered, we can have a little more upside appreciation in that particular month while still providing that high monthly income.
And finally, Troy, why offer exposure to the innovators within the NASDAQ 100?
We thought it was just a great place to begin with, getting into all these companies. You have 100 of the largest non-financial companies on the NASDAQ Stock Exchange in the NASDAQ 100. This is where the growth is. This is where some of the larger tech names are. We really wanted to pair that along with some high monthly income and give you a fund that could provide not only the upside appreciation and total return, but that tax-efficient income.
All right, Troy, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.